Welcome to this week's market drama. We'll begin with the S&P 500, which was down 0.6% for the week. NASDAQ was up at 0.3% for the week. The big difference between the two is technology sector did better, but in particular, there were two stocks that stood out. Tesla reported earnings were better than expected. The stock was up more than double digits for the week. And also Google performed really well this past week. Tesla accounts for roughly 2.2% of the S&P 500, closer to 5% for the NASDAQ, right? So it helps the NASDAQ. Same thing for Google. Google accounts for roughly 4% of the S&P 500 and 5.5% of NASDAQ. So that explains the difference. When it comes to economic data, we did have CPI data come out, core consumer numbers, which exclude the volatile food and energy, rose by 0.3%, which was expected, leaving the annualized rate at 3.3 for the third straight month in a row. One thing to note once you look inside that number is that the housing cost rose 0.2%. This is the smallest monthly increase we've seen in a couple of years. This helped the annualized rate fall below 5% for housing costs. That is a welcome sign because when we see more, call it leading indicators of housing prices, they had to come down. It just hadn't shown up yet in the CPI data. It looks like it is starting to show up, and that should continue to be call it a cooling mechanism for that core CPI in the coming months. When it comes to what we're looking for next week, we do have the Federal Reserve meeting. They should announce a 25 basis points cut. The market's pricing a 95% probability that will occur. So what the market will focus on is what the language used after they make the announcement when it comes to their expectations of future cuts next year. Really, that's going to be the emphasis going forward. Will they cut and by how much next year? That is it for this week. Stay tuned for next week.